From the morning reading, small cap IWM new high leads market. Facebook new all-time high. Oil bounces with a bull flag entry. Airlines soar. 5 of 9 sectors moved higher and one was unchanged on Wednesday. XLE, XLK, and XLI were the strongest sectors while XLP was the weakest sector. Oil futures rose $1.26 to close at 46.14. Oil bounced, creating a bull flag bounce entry. Breadth strengthened compared to the prior session as advancers led 1875 to 1145 on the New York Stock Exchange and led 1712 to 1141 on the NASDAQ. Airline stocks soared, led by gains in Delta, United Airlines, American Airlines, Southwest, and Alaska Airlines. Facebook was up 1.32 or 1.02% to make a new all-time high. On the S&P 500 snapshot, the index goes nowhere. The S&P 500 struggled at the open but managed to inch up to its 0.06% intraday high about an hour into the session. The morning's relatively sound JOLTS report apparently wasn't enough to jolt the index into record territory, nor was the Fed's beige book. The index sold off to its negative 0.34% intraday low early in the lunch hour, then chugged slowly back to within a hair's breadth of yesterday's close, ending the session with a microscopic negative 0.01% loss. The yield on the 10-year note closed at 1.54%, down a basis point from the previous close. The S&P recent highs were lonely. As the benchmark S&P 500 index kept hitting new highs in August, only one of its 10 major sectors went along for the ride, also closing at record highs. August marked one of the few times since 1928 that only one sector closed at a record high along with the S&P 500 during a month. Future returns weren't bad, but less positive than they were when more sectors were participating. There have been a few pessimistic extremes amongst the indicators. Over the past 20 days, there have only been a smattering of indicators that have shown a hint of investor pessimism, but they've been consistently 30% or more of the indicators showing optimistic extreme. That kind of persistent spread is among the most pronounced since we started tracking it 16 years ago. More than $600 million has flowed into gold miners over the past week. The GDX fund has taken in that much, exceeding any other one-week period in 3 years. There is not always a good correlation between ETF fund flows and past or future performance, but generally the flows follow price action and extremes tend to be contrary indicators, suggesting this is a negative for GDX. Its history is mixed in that regard, but it's a bit disturbing since the fund has struggled this time of year. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I'll provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:28 a.m. Mountain Time, and I'm recording this in preparation for the market day of September the 8th, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's go ahead and dive into the morning report. And at the time of this cut, the U.S. indices were pretty much all rotating around scratch, none of them making enough movement to even note. I will make a comment about we're in the middle of index futures rollover. So some of the data sources have moved on to the new December contract, the Z contract, and some are still trading off of the September contract. Volume is still a majority on the September contract, but that's going to change dramatically in the next few hours, and certainly by tomorrow, Friday, most of the volume should be on the new contract. So that being said, what does that mean to you, whether you're a futures trader or not? is that markets can be very choppy, have really poor follow-through when there's mixed contracts during contract rollover. So if we needed anything more to give us just more chop, there it is for you. So just be careful. A lot of your setups, especially if you're an intraday trader, you may find very poor follow-through on Thursday and Friday of contract rollover week. This happens 4 times a year. In other contracts, you have crude oil up sharply at 1.65%. Euro's up almost 0.5%. Bonds are down about 0.2%, and gold is up about 0.2%. In overseas action, China is up just over scratch. Hong Kong up about 0.75%. Japan down about 1/3%. Germany down about 0.5%. United Kingdom up just above scratch. In terms of macroeconomic reports for today in the United States of note, you have the unemployment claims. That's the weekly one. You have the natural gas storage and crude oil inventories both being released today. And that's about it of note for the United States. And looking forward to tomorrow, you'll have FOMC member Rosengreen speaking. And that looks to be about it in terms of important reports. So let's go ahead and take a quick look at volatility. Volatility has been very, very low of late and continues so. Short-term VIX down to a 9.8 skew, still in the cautionary area to 130.94. IV percentiles for the S&P a 5, Russell a 1, NASDAQ a 3, and the Dow a 5. So you got all 4 indices in the bottom 5 percentiles. No standard deviation moves were put in on any of the broad market U.S. indices yesterday, and you see just how little we've had of standard deviation moves in the last 2 trading weeks, and that's a rolling 2 trading weeks. But on the S&P, we would normally have about 4 standard deviation moves in a 2-week period, and right now we're about to have the only one age off. So very, very, very quiet on the markets in the last 2 trading weeks. In terms of the charts themselves, let's go ahead and take a look at that. And our S&P futures, and this one's using the September contract. But you note yesterday, as one of the morning authors said, going nowhere. You ended up with a doji. And so far, last night's activities also a doji after probing a little bit higher. So very, very indecisive markets right now. You're like, how could we be any more indecisive than we've been? Well, the last day and a half action is just that, even more indecisive. In terms of the Dow futures, you got a little bit of a hammer here, followed by, thus far, a little bit of a doji. So not much happening there. NQ did set an intraday high yesterday, powered by Apple, and but ended up also with a doji on the broad index, and so far also followed by a doji with the opening thus far. And then the Russell has had a continued slight bullishness. You get nice bullish candle yesterday, powered to a new high, and then last night actually took out that high with an overnight new high, and price action's right about where you were on the close yesterday at this point. So pretty much the only one that's got anything to say about it in terms of significant bullishness. Crude oil continues to be bullish short term and is now up over the clouds. So be interesting to see if we run back up towards this 49.50 area and take out that prior swing high. That would be the next logical target on crude oil. And then finally, gold. Gold, a little bit of a retracement. Remember, we talked yesterday about this overhead resistance, both from a diagonal resistance and, you know, kind of, you could say even 3 levels of horizontal resistance. One here, just above where it turned. another one here, and then another one here. So a lot of resistance really kind of stacked up above. That being said, I wouldn't be surprised if gold eventually moves through all of that and takes out this former swing high and sets up new highs. It's just going to be very, very probably sloppy getting there, and who knows how long it'll take to get there. So if you're trading gold, you got to be very patient and let it develop. Bonds still very neutral, still in the cloud, and it's just kind of chopping back and forth in a sideways consolidation pattern. Nothing being triggered there. And then in the VIX, we're down here around the 3-year lows, and you know, we got below 12 yesterday. In fact, the close was below 12 at a 11.94, and price action right now would have us at around an 11.87. So tick down below 12. We'll see if we can get below 11 before we get some sort of expansion in volatility. And let's go ahead and move on to the daily report. And this one a little quieter than the amount of changes that we had from the prior session into yesterday, and especially up here in the top, there's no changes, I don't believe. Intermediate term phase opinion is market phase 3, bull flags. Our 3 market timing signals all the same. Confirmed uptrend from IBD on the first mechanical signal. GMI index has you at a 6 out of 6 and also an 8 out of 8. And that buy signal has been quite persistent in being in place since 7-1. Stock charts decision point scoreboard still mixed though on short term and long term. That's the primary muddle to our market timing signals at this point. Overall consensus is bullish, but expected to be quite choppy given these mixed signals from decision point. Position sizing opinions 100% on both the models. Intermediate term market posture is very strong bull, and that's supported by a bullish sentiment line. You see it actually improved yesterday on the S&P and the Dow, moving up over the 50 area. NASDAQ's in the severely strong, as is the Russell. Strong trend, according to this indicator. Overall hedge warning status 0+, normal with some cautionary aspects. No changes in our strategy opinions yesterday, other than to note that we were just inside the window prior to yesterday's close. Now we're just outside the window, still calling this borderline acceptable for novices to initiate new option income positions. No changes in the cover call or put selling strategy recommendations. Still given the okay to initiate new positions on both of those opinions for novice traders, but using relatively conservative ratios of strike selection as well as low beta, high beta portfolio selection. In terms of specific warnings, you see here under the volatility area, the new warning here with the VIX below a 12. You still have that daily squeeze present, still have a high distribution day count on the S&P, and still have that skew warning that we mentioned earlier. Under trend base, everything there is fine. In fact, on the New York Stock Exchange, new high, new low indicator yesterday, you're a 404 on the new high, so strong there. On the key intermarket risk aversion indicators, no change from yesterday. Still, all these actually are really tightly wrapped. While they're technically got 4 as risk off and 1 as neutral, one could make a case that really all 5 of these are pretty neutral. We'll see if we start to get some angle and separation in those, but right now these are not supportive of the bulls. Really probably saying more than anything else a lack of energy and momentum to anything. A little bit of the short-term sentiment scrubbed off yesterday, but we're still left with a bit of elevated intermediate-term sentiment on stocks. And you see the fear and greed index still a 65, same reading as yesterday. So no changes there. In terms of our sector-specific information, You can see the winners yesterday. Generally, this is fairly green. Most of the sectors had a majority of their participants in the green for yesterday. Energy, real estate. And remember, this is that new sector, XLRE, I believe is the symbol. Yes, XLRE. You might want to make a note of that. This is the new sector. So these were all formerly in the financial sector. These are your REITs and stuff like that. But they've been pulled out of the financial sector, so they're no longer in XLF. This has been recharacterized, and it's now XLRE for those real estate groups. And then also infotech, telecom, industrials, consumer discretionary, and financials, all pretty strong days. The ones that struggled were the materials and especially consumer staples. So do note that most of what's down here at the bottom was the defensive sectors. So here are utilities, healthcare, consumer staples. The exception to that was telecom. Of course, telecom's made up of only like 5 companies. 1, 2, 3, 4, 5. Yep, 5 companies. So, and 2 of those are just giants within, in quotes, that sector. So just kind of keep all that in mind. Overall, you see the intermediate market postures on these. Most of them are positive, but the short to intermediate on the consumer staples, healthcare, utilities, and retail are weaker. So for the most part, the more defensive sectors are the weaker areas. And then on our percent change, you see nobody got particularly aggressive yesterday with the exception of perhaps consumer staples, down nearly 1% on the one day. Okay, that should be enough for today. Let's go ahead and bounce over here, and I'm going to kind of scroll through this stuff. If you see something of interest, just hit the pause button, go to the hyperlink, get the additional details. There's a couple ways here to join our mailing list. We send out very few emails, but when we do, it's usually a new blog entry, or some sort of alert about a hedge risk change. So if you'd like to be on that mailing list, obviously, if you want to follow us on social media, I in particular suggest the YouTube, subscribe to that channel so that you get notice of when the content is posted. And then also Twitter, I follow, some 150 plus financial stalwarts, and when I see something of interest, I send that forward. It's no fuss, no junk, just straight financial material, and and some of the really good stuff I send forward there. So you might want to follow me on Twitter. And then something about the products, if you're interested there, you can find more information at these hyperlinks. This is a great deal, actually. And we do have a 2-week free trial. Disclaimers, as always, hit the pause button if you need more time to review the disclaimers. Also note down here at the bottom, there's a hyperlink that takes you to the full set of disclosures. We'll see you back here with the next market preview session from Falcon Global. In the meantime, manage that risk. That'll take care of your consistency and productivity in the trading. And then, of course, in the meantime, go learn something each and every day and create a successful craft. Good trading.